Good morning, everyone, and good morning or good afternoon, or still morning, or wherever they are, to those online. It's a pleasure to be here. I actually like the fact the room is relatively small, so we can turn it into more of a conversation. Um, but I think how do we control this presentation? So while we're waiting for that, it would be great just to get a sense of those of you in this room to tell me a little bit about yourselves. Starting with you, what's your name? What are you studying here at Miva? And just give me an idea of your career, because it also helps me contextualize who I'm speaking to.
Hi, good morning, everyone. My name is Ladi Balogun. Currently, I work as an R&D. I study
You can sit down, you don't need to stand up.
I study MBA at Miva University,
MBA, okay.
product developer with John Group,
I know John Vent very well.
17 years career in the FMCG. Work with Olam, with Dangote,
Fantastic.
with GB Foods,
Okay,
Kellogg's. Kellogg was my last place before joining Zoom.
excellent.
I'm working as the R&D and the product developer.
Wonderful. I know all those companies very well. They're all customers of FCMB, so congratulations. And yourself? Yeah. Maybe I can give you this.
I'm a third year software engineering student here. Currently, I work as a business developer at Premier Software Trust Limited, sales of software services for businesses, individuals, institutions, and I'm here basically to learn how to lead and innovate, the right way. Thank
So
you.
what course are you doing here?
Software engineering.
Software engineering.
Yes.
Okay, fantastic. Okay, you?
Okay. Good morning. My name is Oluwaseun Kehinde. I'm 100 level accounting student. I have a background in supply chain management and marketing. Uh, I'm studying accounting because I want to access a master's in finance, and I'm not able to unless I have some kind of a background. I'm presently into real estate agency and development, and I've been for about 7 years now. Prior to that, I've been in food processing. Yeah, and it was more focused on operations management at the time.
Okay,
And that's
wonderful.
it.
Thank you. Are you a student or staff? Okay, go ahead. You'll be the last one. Or are you a student? Okay, you'll be the last one. You were late, so we won't get to hear who you are.
Hi, good morning, sir. Good morning, everyone. My name is Alex Ortega. I'm an MBA student with Miva. Um, I am a product manager with a pharmaceutical company. So I'm a
With a what
pharmacist,
company?
pharmaceutical company.
Pharmaceutical. Okay, great.
Yes. I'm a product manager. I'm trained as a pharmacist, but currently, I'm just less than 3 years in terms of my experience in that role. So I'm just here to learn and also improve my knowledge on innovation. Thank you.
Okay. Are you feeling shy? You can keep it short if you want, as short as you like.
Okay. Good morning, everyone. My name is Abdulaziz Muniratu. Um, I'm a student of Miva Open University, 200 level data science.
Data science.
Yes.
Fantastic.
Um, okay. I'm a teller.
You're a
teller. I'm working in a
teller.
bank.
Okay, which bank?
UBA.
Okay, good you didn't say FCMB. Or not good you didn't say FCMB. Anyway, carry on.
Um, I'm new into business industry and all working aspects. So I'm trying to put myself together into both working and learning at the same time. So
Wonderful.
I hope Miva can do more better and put me through
Sure.
more in it. Thank you.
Excellent. And are you a student? No. Okay, good. Anyway, Mr. Lateman, we're not getting to hear who you are, but maybe at the end, if you have questions, you'll introduce yourself. Okay, so look, it's a pleasure to be here. I think that what you guys are getting from Miva is an exceptional opportunity. And that's why I chose to commit my time over this weekend. Not that I'll be doing much on Saturday mornings anyway, normally just relaxing and recovering from typically grueling week. But thought it would be very important for me to come and share with you some insight. And I should also thank you and Miva, because when I was asked to do it, really I agreed because I know your founder, Sim. I was like, yeah, whatever, I'll do it. Always glad to support an entrepreneur. And then I was sent the list of topics, and it took some time to reflect on which topic I should talk about. And I picked this, in fact, I can never remember the title, but Leadership and Innovation, Lessons from the Nigerian Banking Sector. And then when I got to preparing the material, I actually learnt a great deal myself. So even for me, it was an education putting the material together. So I hope you find it useful. I'm very sure you will learn one or two new things. But I really hope that you don't only learn, but you get to apply some of it in your careers. Suffice to say that I think leadership and innovation are some of the most important things to the success of businesses and countries. How are we going to move the thing? It'll be moving for me. So I'll just have to say next slide. Okay, because that means I have to be turning to see where we're at. Okay, that's the agenda, what we'll be going through, the outline of my presentation. And the bringing it home will be more talking about yourselves and what I think, and maybe that's when it'll get more into a discussion and it will flow straight into Q&A once we bring it home. Just to check, are there going to be questions from people online? Okay, all right, good. Okay, fantastic. Okay, if we could move to the next slide, please. Yeah, and this is really where I want to start, because an introduction was provided about me. But I think one of the things I wanted to really, first of all, start by saying is I really stand on the shoulders of some giants, right? And I wanted to talk about two of those giants that preceded me as CEOs of FCMB or FCMB Group. And, you've heard a bit about my background, but I think it's also very important to acknowledge the immediate CEO of FCMB Group before myself. He was a British guy by the name of Jonathan Long. He came to Nigeria in 1977 to help the then City Securities Limited, which was a company that existed before FCMB, to advise the federal government on the restructuring of NNPC that we have today. So CSL did that advisory work. He was a smart young banker, Oxford educated, working for an investment bank then that focused on oil and gas called Charterhouse Jaffe. He got on so well with our founder, who's my late father, that he said he wouldn't mind working in Nigeria afterwards. And he basically helped the founder build up the investment banking business of FCMB. He passed away, unfortunately, maybe around 2019, I think it was. But while he was here with us, he was an extremely smart, very witty, one of the funniest people that, I certainly knew. And he was the trusted advisor for most of the multinationals that were doing business in Nigeria. And that was how FCMB ended up banking a lot of multinationals that really, for a bank our size and being totally indigenous, it was surprising that we would bank all these multinationals. He was definitely, in my view, one of the best investment bankers ever produced or that ever worked in Nigeria. He was, most of his career, because when he joined us in 1977, he was probably my guess I can calculate because he was around the same age as my mother. So my mother was born in 48. 77 would have made him 29, right? So he actually came 29 years old, probably similar age to, I don't know if anyone here is 29, but so most of his career was here. And I would argue there have only been 3 other investment bankers that were as good as him in Nigeria, literally. And one of them was a gentleman called Atedo Peterside, who today is still around. He was a founder of IBTC that merged with Standard Bank. And the other 2 happen to also bear the same surname as me. My older brother, Ladi Balogun, who is founder of Chapel Hill. If some of you heard of Chapel Hill Denham, it's the top investment bank today in Nigeria, and he was the founder of that. And I'd say the other one that's probably in that league is my late father, Otumba Balogun, who passed away in 2023. But I stood on the shoulders of Jonathan. I learned a lot from him. In addition, of course, I stood on the shoulders of my father, who was the founder of FCMB, which he founded. The first company was CSL, which he founded in 1977. And 1983, he founded FCMB. He was very fortunate that he was able to get a scholarship to do a degree at the London School of Economics in the United Kingdom. He started his career with the federal, he was a lawyer. He was the only black face in the British Parliament when he graduated because he was a parliamentary draftsman, helping to write the laws for the colonies when they were preparing for independence. And then he moved to Nigeria, worked as company secretary for a bank called NIDB, Nigerian Industrial Development Bank, which later became the Bank of Industry, that some of you may know today. And he helped them set up an investment bank called Icon Merchant Bankers, which stood for Investment Company of Nigeria. They wouldn't make him CEO because they felt he was a lawyer and a company secretary. And they gave him an ED position, but he felt that he was good enough to run a bank himself. So he then set up CSL Stockbrokers and then First City Merchant Bank. And that's really how I came into this position I'm in. So really, I stood on the shoulders of giants, and I'm very, very fortunate for the foundation that they gave, the businesses they built, the training and the learning that I got from them. And you will hear a lot about building and knowledge transfer when I discuss. And in fact, the next slide talks a bit about that. So you'll probably wonder, what do pyramids, cathedrals, Japanese houses, and bridges and roads in China have to do with leadership and innovation? So ignore the words on this slide because I have an executive assistant that I told him this story and then he started writing all this stuff. But frankly, just listen to what I'm saying and look at the pictures, right? So the first thing is pyramids were built and were very sophisticated. But the problem is they did not pass on the knowledge. So people don't even know, if you ask people to build pyramids today, they don't know how to build it. But they were very remarkable things. Europe built lots of beautiful cathedrals, but again, they did not pass on that knowledge. And that's why today there's no innovation coming from Europe. And Europe is actually very much in a very difficult economic situation, right? So again, no knowledge transfer or no intention to transfer the knowledge. And why? Because they were very prosperous. I was reading a book recently where it was written by, I was talking to about the book to the CFO of Miva, where the guy said that China is proud to be called a developing country rather than a developed country. Why? Because it will be very sad if you stop developing. Europe took pride in being developed and they stopped building and they stopped transferring the knowledge of building. So they have lots of beautiful cathedrals and monuments, but unfortunately, no one knows how to build those cathedrals anymore. When I think one famous cathedral in France caught fire, they were able to fix it, but they didn't really initially have the knowledge. They had to struggle to get the knowledge for how they were going to restore it to its former glory. Now, move east to Asia. There's a reason Japanese people still build houses with wood and paper, right? And the reason is that things built out of wood and paper don't last forever, correct? And so if they want to maintain the aesthetic of that particular village or town, if they build something from wood and paper, in maybe 20, 30, 40 years, it will decay and they have to build it again. So the fact that they have to keep building to replace this, unlike the pyramids or the cathedrals, means that they've maintained that craft and that knowledge of building. And then we move to China in the East. I mean, going still in the East. And China, if you look at their political class, they're mostly engineers. If you look at what they do in China, they will build things even when there doesn't appear to be a demand for it. So they will build bridges and roads in remote parts of the countryside. And you've all probably seen things online of one fantastic bridge in China that is going through a forest somewhere, and you're like, why are they building that? And in fact, in China, rather than pay people social welfare, right, in terms of, I can't remember, what they call it. I mean, I grew up in England, so they have a name for it in England, but they would rather just build things to put people to work, even if they don't need that thing, just so they can pay them for building and the people learn skills. It's one of the reasons why China is now probably ahead of America in most things, because they retain the knowledge and the skill of building. Unlike maybe America, and I would argue probably the only sort of famous innovator in America that still builds is Elon Musk of Tesla, that he's still in manufacturing. But most other American innovators, even Apple, their manufacturing is done for them by companies in China. Tesla builds its cars in China, but it's built some in China, some in America, some in other places, but is built by Tesla factories. Apple has outsourced the build of its phones to a company called Foxconn, which is why, if any of you, I know most people here will be Android users, but if any of you use Apple, you'll see that iPhones have not innovated for the last 15 years, 20 years. I can't remember when my first iPhone was, but maybe after iPhone 6 or 7, they stopped innovating. So building is a core part of innovation. It's a key part of that ecosystem, because once you understand how to put things together, you can understand how to improve them. And as an institution in FCMB, we intentionally build the capabilities to build, both for financial innovation, where we build financial products, so we don't necessarily just copy, so we deliver unique solutions for people, but then also technological products. And I'll talk a little bit about that at the end. So I think, and I'll give you an example with technology, because you're a software engineer, right? A lot of banks in Nigeria, they will go and buy software from vendors like Oracle, vendors like Infosys, and so on and so on and so forth. When they have a problem, they can't fix the problem. They have to go and call the vendor to fix it for them, which is why you will find that a number of fintechs, their systems are more reliable than the banks. Why? Because the banks haven't built it, right? They've relied on vendors. And those vendors, their priority is not your system to be reliable, it's to sell more software, right? So we have learned that, and you would have seen over the last few years, our reliability is getting very, very high, So it's because we've been investing in engineering over the last few years. A number of our subsidiaries, we build our own core banking system, we build all our own apps, we build our AI chatbots. So we're building. And then on the finance side, we build a lot of innovative financial products that did not exist before. By building, you can innovate. By buying, you don't really innovate. Because typically, no one gets fired by buying from IBM or buying from Oracle. But the problem is, if you buy your solutions from IBM or Oracle, they're big companies. Everyone else is using the same solution, so you're not innovating. So one thing that you have to take away is that either as an employee or as an entrepreneur, if you want to be in an innovative company, that company must be building. And if it is not building, it'll end up like the pyramids or the cathedrals of Egypt and Europe. Okay? So let's move on and talk a little bit about leadership and why leadership is important. And I just thought, I looked for two quotes. One by a guy called Warren Bennis. And it says that leadership is the capacity to translate vision into reality. And I think that's the most important thing. And I was having a chat with the CFO earlier, saying that we're talking about a particular problem statement that he was just getting my views on. I say the first thing is you've got to have that vision, right? And the vision is provided by the leader. No one else is going to provide the vision. So if any of you want to be a leader, you have to be visionary, right? But vision is not enough. You have to be able to take that vision to reality. People say vision without execution is hallucination. In other words, you are just dreaming and so on and so forth, but it's not going to happen. So real leadership is vision plus execution. The other thing that's very important, and there was an American president, Dwight Eisenhower, he said the supreme quality for leadership is unquestionable integrity. Let me tell you why integrity is very important in leadership. Leadership is about getting people to not just follow you, but at the very least, put in discretionary effort. Do you know what I mean by discretionary effort? Things that it's not just about clocking into work and closing at 5. It's being willing to work till 7, 8, 9 p.m. Leadership or integrity makes people, they will die for the cause. I can tell you there are certain things that have happened in FCMB over the last decade that literally will bring you to tears because of the way people will go over and beyond because they trust the leadership. And not just myself, but the people they work with, because they know that there's truth to what we're trying to do. And the company that a leader or doesn't have integrity will find that the followers know very quickly. They know that the leader's just in it for themselves. And they'll show up, they'll do the work, or they'll do it for the money. And the truth is you can't succeed without people putting in that discretionary effort. There are many things flawed about China as a country. Most importantly, its human rights and the rights of the individual are not really respected. But one thing you cannot take away from them is the way they've developed the country and pulled people out of poverty. And no other country in the world has pulled as many people out of poverty in such a short time frame. And in the next few years, they'll move from middle income to a high income country. And for a country of 1 billion people, that is exceptional. And there's something they call in China the 996. And I'm trying to remember it. That people in China will work from 9 a.m. to 9 p.m. 6 days a week. Not because they're being flogged to do it, but because they believe in the cause, right? So that integrity is so important for leaders to be successful. So if you think about that as if you're a leader within an organization or you're leading your own organization, your integrity is one of the most important things to getting that discretionary effort out of those that follow you. And the only way you succeed as a leader is if those that follow you outperform, right? There's nothing else. You will not do it by yourself, right? So that's extremely important. What are the responsibilities of leaders? Number one, they've got to inspire purpose. So why are we here? What are we doing? Is it helping? Number two, they've got to build trust, which is sort of what I've talked about. That's why integrity is important. Number three, you empower your teams. You can't do it yourself, no matter how smart or strong you are. And I often think about, for my sins, I'm a Manchester United supporter, one of the worst performing teams, now. But when I was young, we used to do very well. And I read the book about Alex Ferguson. And there was something that he said in his book. And the book, I think, was called Leading, even. I'm not sure what the name of the book was. He said that he never would be on the field practicing with the players. He will always be in the stand so he can observe everything, even in practice. Whereas some coaches are there playing with the players and they still think they're, fit and skillful. But that's about empowerment. You have to stand back, understand what's going on as a leader, and not try and do things yourself. Leaders drive execution. There's a science to execution. There's a discipline to execution. If you want to learn about execution, I would strongly advise you find a book called The 4 Disciplines of Execution, 4DX. I can't remember who writes it, but if you Google it, you'll find it. And it gives you a playbook of how to execute, and it's extremely effective. And most importantly, you have to foster innovation. And that, for me, is a key responsibility. I won't mention names, but you can be a great leader or a good leader that has integrity, but you don't foster innovation. And if we think about the political history of Nigeria, we can probably think of 1 or 2 leaders that were supposedly good leaders, but did not foster innovation, so the country did not go anywhere. In fact, they may even be bringing policies of the 18th century. So leadership is not enough. For any company to thrive, a leader has to foster innovation. And then the characteristics, good leaders are visionary, and I've talked about that a little bit. You've got to have a vision. They're empathetic, because if you're going to get that best out of the people, that discretionary effort, definitely you must create an environment where your people can thrive. And the only way they can thrive is if you understand the conditions under which they will thrive. Psychological conditions, physical conditions, all those things are important. You have to be decisive as a leader. Decisive doesn't mean you take every decision, but you make sure decisions are taken, right? And you don't procrastinate. Even if the decision is wrong, it's better to make a decision, learn from the mistakes, and move on. People say if any of you, I wouldn't advise necessarily that this holds for Nigerian tech startups, right? Because there are many issues that Nigerian tech startups will struggle. But I was speaking to a friend of mine who's a venture capitalist, and she said she's lost more money from the investments she didn't make than the ones she did. What does she mean by that? Is like, there are companies that she was like, nah, okay. And it's not that she wouldn't invest, she just didn't make a decision. She didn't constantly say, no, I don't like that company. It's like, oh, somebody mentioned NVIDIA. Oh, yeah, okay, maybe I'll look at it later. Next thing you know, it's a $4 trillion company. Somebody mentioned OpenAI. Oh, next thing you know, it's a $500 billion company. So now it doesn't mean that you should be making decisions about things that have nothing to do with your life and your purpose and your mission. But if you're a venture capitalist, you should have made a decision on that, a conscious decision. So I think being decisive is absolutely key. And I've talked about why ethics is important. So I want to move on and talk a little bit about innovation. And I want to use one of the most useful frameworks I've found to articulate innovation. And before I get to that framework, I want to say that innovation is not invention. They're 2 very different things. Because you can invent things that don't really create value. And you can invent things that don't really drive growth. 2 key elements of innovation is value creation and growth. Without it, maybe you're just inventing things. So you'll always hear that, it's lovely, I'm sure some of you may have done it, that, there was a Nigerian kid or a Kenyan kid who built a tractor out of cardboard. Fantastic, great invention, but it's not innovation, right? But then you hear of the Nigerian kid who created something that helped achieve something or, add value for his community. That's innovation. So that's how you should differentiate the 2. But more importantly, there are many different kinds of innovation. And there's a book, it's called The Prosperity Paradox. And it was written by a guy called Clay Christensen, who's dead now, unfortunately. Seems a lot of dead people. I'm getting old. But Clay Christensen was a professor of Harvard Business School. I think he was a professor when I was there, although he didn't teach me, but he taught a few other people I know. And the book was co-authored by a Nigerian Harvard graduate as well, who thankfully is still alive. His name is Ifosa Ejomo. The book is called The Prosperity Paradox. And it talks about how do countries get rich, right? And it broke innovation into 3 types of innovation, right? And the first is sustaining innovation. And that's where a company will find a new way to do things that helps sustain and keep it alive. Sustaining innovation does not create prosperity. It may aid survival. So it's still important. The next is disruptive innovation. Disruptive innovation is good for a company. And the best example of disruptive innovation that people talk about is Uber, where it disrupted traditional taxis all over the world, right? But there's a challenge with disruptive innovation. Normally, you're killing business of somebody else. So economies and societies don't necessarily grow. You as a company may thrive, right? And of course, in the process of thriving, you may also create new things, right? But it's not the most powerful form of innovation. But the most powerful form is what they call market creating innovation, where you're moving from if you look at disruptive, it's like people were consuming, let's say, taxi services from regular yellow or whatever color they are taxis in Lagos, but now they're consuming taxi services from Uber. It doesn't necessarily lead to 100% like new consumption. But when you have market creating innovation, really there was no consumption in that area before, and you're creating new consumption that didn't exist. And that is the most powerful for a country or for an industry. And when I talk about the FCMB, sort of some of the innovations we've had, and I try to find about 10, just so I could give you practical examples. We could find examples of every type of innovation. But if I don't use the FCMB example and I tell you of a particular innovation, something like the entry of mobile phones in Nigeria, it was market creating. Why? There were many services that did not exist before that were now possible because of mobile phones. And we can all think of many. And there are numerous examples of market creating innovation. I'll tell you one that is very unusual. The sewing machine was invented by a gentleman by the name of Singer, which if some of you are young enough to even know old enough to know what a sewing machine is, there was something called Singer sewing machines, and they're probably still around in the world. And before Singer invented sewing machines, people would not have more than 1 or 2 items of clothing because, frankly, it took a long time to make the clothing, right? But when he now invented the sewing machine, all of a sudden, the rich could now have many items of clothing that were made faster. So one of the things that accelerated, and people wouldn't understand this, is the furniture industry. Now you're wondering why. All of a sudden you have a lot of clothes. What do you need? Wardrobes. So a weird innovation like a sewing machine actually spurred the furniture industry, where people started making wardrobes where people didn't need wardrobes before. And this is what things like the mobile phone did. They just spurred things that people didn't need before and just created markets. And those are the most powerful innovations. And those are the ones that foster inclusion, drive growth of a market. And those, for me, are the most significant. And when we look at, the Nigerian financial service industry, banking industry, we'll see examples of those that I will go through. Now, next slide. So just to summarize how leadership and innovation sort of come together. A leader must provide a vision. A leader must empower the people to innovate and to drive. A leader must create a culture and an environment, and that's part of the empathy, that ensures that you can get the best out of people. You should encourage experimentation. You should encourage risk-taking, but within boundaries. You should reward learning, right? And you should sustain growth that comes through innovation. And that is cultural, because there'll be some companies that say, don't do things any differently, just do it this way, no other way. And that will not support innovation. A leadership must make sure a company is very good at execution. And there's a very important reason why execution is key. You learn from the things you do. That once something is done, you see whether it works or doesn't work, and you can iterate and improve. If you take, the gentleman who's a software engineer, right? You can take 3 months to build a product, 1 year to build a product, or 1 month to build or ship a product, right? The company that is shipping products in 1 month will innovate a lot more, because they can learn and iterate and improve it, such that by the end of the year, they will have 12 innovations of that product. The first version is called what? The MVP, right? So from their MVP to their version, whatever, all of that, 12 versions could happen in 12 months, right? And that's why execution is so key to drive innovation. And the last thing I want to mention that is so important for a leader is collaboration. And again, I think it's always good to give examples that are not just about banking, right? But one of the biggest mistakes America has made was when they put a lot of trade restrictions with China for things like artificial intelligence, that you can't sell microchips to China, you can't do this, you can't do. So what you found is that America is not benefiting from the massive innovation that is coming from China, and vice versa. So if you look at, and like I said, I was lucky that I stood on the shoulder of giants, right? A lot of the things I'm doing could not have been done if I hadn't leveraged off the achievements of those that came before me. But whether or not you are fortunate enough to have had maybe that opportunity that I had, you can stand next to giants, learn from them, and innovate by leveraging some of what they've already done, right? And build things together. So if you look at the banking industry, and I'll get to that in a second, it's very rare that anyone is innovating in isolation. You'll always find that people are, everyone knows of API technology now today. So you can partner and collaborate by consuming the APIs of others that have already built something to deliver a new solution to your customer. Okay, so that's where you'll find that's like a perfect example of collaboration. Before API technology, that wasn't very possible. Software applications were very monolithic. Everything came from one person, end to end, and the quality of that software was worse. Even reliability was worse, because if you had a particular service that broke, it would mean your entire system probably broke. Whereas with API technology and collaboration, you can get best of breed for one thing, plug it in. If it's not reliable, you rip it out, you find somebody else that does it. And that is collaboration at work. Collaboration is extremely important for innovation. And I think as leaders, as employees, whatever you may be, it's absolutely critical that you collaborate. You don't work in silos, whether it be within your company, within your industry, or within your economy. Because sometimes collaboration doesn't need to come from the same industry. So you have to think as a leader about collaboration. So I want to move now just to talk a little bit about innovation in the banking industry. And and I will try and whiz through this, but there has been a huge amount of innovation over the last 50 years and even before. If we go back to the 1960s, most of the banks in Nigeria were set up by the former colonies and really were designed to support the colonial trade and the colonial commerce, right? And maybe they served government as well, but most individuals were not really involved in banking. But by the 1970s, indigenous banks started to emerge. In fact, one of the first was Wema Bank, which carried a different name then. I can't remember the name, but one or two of you may. But the likes of First Bank came, although First Bank was technically the nationalization and sale of what was previously, I think, Standard Chartered or something like that. Union Bank was the nationalization of sale of Barclays to become Union. So I wouldn't say there was much innovation that happened between the 1960s and 1970s. At best, what I would argue is if there was, it was almost like a sustaining innovation. In other words, these banks under local ownership were able to be more sustainable, were able to do more for the economy than they were under foreign ownership, right? Now, in the 80s, we then had liberalization, where under Babangida, it was like, I think it was Babangida, or was it before Babangida? I think it was Babangida, where it was like, even before Babangida, trying to remember who was head of state when FCMB was founded. I know who was vice president. It was Alex Ekweme, and some of you may know that story of how FCMB got founded based on the friendship between Alex Ekweme and the founder of FCMB. But in any case, between the 80s and 90s, the industry was liberalized. People were allowed to, private investors were allowed to set up banks. And FCMB was one of the first to do it in 1983, was when we started. But that led to when people saw that, one man can do this thing, others now followed. Because initially when FCMB wanted to set itself up, right, the government said, go and find either a technical partner, which is a foreign bank. Well, certainly an option of getting government as an investor was an option. And the founder went around the world looking for a foreign partner. He actually went with Jonathan Long, because at that time we're just CSL. But they couldn't find anybody. Nigeria was under military dictatorship. Nobody wanted to come. So in the end, he just got some offshore investors. They created a little trust company held by an insurance firm. And that was like the foreign capital that was brought in, but it was fully managed by Nigerians. After he did it, the government saw that, oh, we can actually allow more Nigerians to do this because the business was very successful. And that's really what led to the creation of GT, creation of Zenith, creation of everybody that you saw. So that really was a very significant evolution for the banking industry, which frankly was started by what FCMB did then. And in those days, we were called First City Merchant Bank. Even the likes of InterSwitch, we were seed investors. InterSwitch was birthed it wasn't birthed, that's not true. But the funding for InterSwitch was cracked in my sitting room in my house in maybe 2000 and 2001 or something like 20 something years ago, when the ones that started came to my house and said, we have this idea, a few banks have ATMs, but their ATMs don't speak to each other. We can create something called a switch. So if you have in fact, one of the leading banks with ATMs then, which doesn't exist there, the first ATMs in Nigeria was Societe Generale Bank in Nigeria, right? But they're unfortunately not around anymore. If you have an SGBN ATM card, you can go to First Bank and use their ATM. So let's create a switch. That was the reason why InterSwitch was started, right? But they didn't know how to fund it. So between Accenture the founders of InterSwitch, a company called Telnet, of which the CEO of InterSwitch today was an employee of Telnet, and it was his idea. And then we said, okay, let's put a few banks together, and we will put in money and create InterSwitch. And now it's blossomed into something, much more significant. So I was actually on the board of InterSwitch for those years until it was sold to some international investors. And even Nibs came around there. Now, what is this an example of? Collaboration, the industry collaborating. We didn't stay in silos. So it shows you how important it is. We've seen something else now, right? Which is the emergence of fintechs, right? And there's one very important trend I want to call out about the emergence of fintechs and why they've been successful, and is also partly why Miva has been successful, right? Is that if you look at the founder of Flutterwave, the founder of MoneyPoint, the founder of Paystack, I don't know anything about founders of OPay because they're Chinese, right? They were all engineers. So as a software engineer, you should be starting the next unicorn fintech, right? They were all builders. So they understood the problems that why banks could not serve their customers well. So as engineers, they were now able to engineer a better solution, right? So that is common. And if you look at Miva, the founder, although he may not, I don't know what he studied for undergraduate. I know he was a finance guy and his career is in finance, but he's always been building. He built Conga, he built another business, Deal Day, he built ULesson, he built builders, and he's always had engineers. And he's even had some very successful. There was a guy I hope I can say this, it's not a big deal. There was a guy that worked for Conga and a lot of people don't know this, right? That one day, Simdal heard I was trying to do something in fintech and cross-border payments, and he was like, you should speak to a guy called, I can't remember the guy's name now, but it'll come back to me in a second. He's an ex-Conga product manager, which is product and engineering is very close to each other, as you probably know if you're a tech person. And he's building something quite cool. He's one of the best people that work with me. I stupidly did not invest in that company. As you say, you lose more money from the investments they make. That company today is Lemfi. Some of you have heard of Lemfi, that is used for remittance. The founder of Lemfi had worked with Sim in Conga, right? So what am I saying? A company that has a culture of building. I can tell you if the founder of Lemfi had come to maybe FCMB or First Bank, would never have understood how to create Lemfi. Just would not have been in his, thing. But when you work in an organization of builders, that is really key for innovation. And that's what you saw with the first generation of fintechs. Now, present day, even the Flutterwaves and MoneyPoints, they're going to get disrupted. And you're already seeing AI come, but the advantage they may have is because they are builders, they may be able to build AI. What else is happening in financial services? Blockchain, stablecoin, crypto, all these things are coming. If these companies have engineers and builders within them, they can use this technology to evolve and still stay ahead of the game. If they're not builders and they're buyers, they're dead. It's one of the reasons why FCMB is investing heavily in building, because we're now thinking, how do we use AI to drive our business? How do we use blockchain to drive our business? You can't do it if you don't have builders within your company. And just a simple statistic, some of you may have seen in the newspapers or online. I mean, I'm showing my age. No one here reads newspapers probably. That the volume of crypto transactions in 2024 in Nigeria was $50 billion. The volume of transactions on the Nigerian stock market in the same year was less than 10% of that figure. So that just tells you that if I'm a fintech and I was focused on selling shares to people on the Nigerian stock market, right? And I don't have engineering capabilities inside my organization, the crypto guys are going to wipe you out. Right? And now, even the biggest bank in the world, JP Morgan Chase, has said they will now accept crypto as collateral. Right? Soon, Nigerian banks will be accepting crypto as collateral. They have to. Right? So these are the sort of things that are happening now that unless you are building in your organization in financial services, you will end up being disrupted. Luckily, all the companies I mentioned have an engineering and building mindset, so they will continue to evolve. But I think the banks, all the ones that I've listed here, are all at risk of basically being irrelevant unless they massively scale up their engineering. I think putting aside the effect of AI on engineering, right? Because that may reduce the number of engineers you need, or it may not, because it may increase the number of things you're now doing because of AI. The average bank or large enterprise scale fintech will probably need 1,000 engineers, right? Just building and shipping and maintaining its products, right? And today, the average bank we probably have 150 engineers, maybe 200. So we're going to 5x our engineers if we really want to have a chance, in the future. So I hope that sort of gives you a sense of how innovation has evolved and what's likely to happen in the financial service industry and banking. So I'll just share with you just some of the things that we've seen in FCMB, some of the innovations, if we can move to the next slide. Right, some things we've done. And, I don't like to sort of blow our own trumpet, but I think some of this stuff also helps to give sort of real life examples, because not all innovation has to be about technology, right? There's many ways you can innovate. So the first was City Securities Limited. How did we get started? City Securities Limited got started because the then head of state, General Obasanjo, said, multinationals must sell their shares to Nigerians, right? That they couldn't be owned by just 100% foreign-owned companies. The founder of CSL realized there was an opportunity. He had been involved when he was working in the British Parliament, writing the laws for the Stock Exchange of Ghana, which was at the time still a British colony. So he understood how stock markets worked, and he'd been involved in setting up the stock market in Nigeria. So he realized, and he went to all these companies, Mobil, Coca-Cola, Texaco, all of them, and said, instead of selling to one wealthy Nigerian man or one general, sell your shares on the stock exchange so you democratize ownership. So if tomorrow this investor falls out of favor with the next regime, your company is not at risk, right? And CSL, as a result, did about 10 what they call IPOs, initial public offers, over a period of 3-4 years, of all the big companies in Nigeria, pretty much, 7-Up, Bottling, all of them. And so that was an innovation. It was market creating because it really created a retail investment industry that did not exist before, right? First City Merchant Bank, as I said, first privately owned merchant bank to be established. There are many products that we created for the first time, which I don't want to go into the details, but most importantly, it laid the foundations for many of the future banks that came. And there are many industries, including the software industry in Nigeria for banks, that really, because so many banks came, all these companies that are building different software for banks, and in fact, the banking industry is probably the biggest customer of the software industry. The banking industry is what created the fintech industry. If you look at most of the entrepreneurs that initially went into fintech, they came from seeing how broken things were in banks. either as employees in the IT departments of banks or vendors. Because even InterSwitch was the parent company, that core investor in InterSwitch when they started, a company called Telnet, its biggest customers were banks. So they saw the issues, right? So by pioneering what I will call entrepreneurial banking in Nigeria, FCMB really helped. It was a market creating innovation. It just created an entirely new industry that didn't exist before. Credit Direct Limited is the star in our portfolio of companies. I haven't talked about the different companies in the FCMB group, but we were the first people to launch products you could get a loan in 24 hours in Nigeria. It wasn't possible. Now there are lots of fintechs, Fair Money, this one, that one that does it. But Credit Direct was the first company to do it. They had a product called Sharp Loan. It was payroll deduction for today. Credit Direct has 30% market share of total loans in the non-bank sector, right? They now, this figure is actually, they're now, because they use generative AI, they're dispersing 10,000 loans a day, right? And I don't know if you guys know what NPS, Net Promoter Score, is. It's a measure of customer satisfaction when people recommend. So Credit Direct is one of the few lending companies where their customers actually love them. You know, because they have a peculiar thing about many of their loan products, which I shouldn't, say here, but many of their loan products, if your payment is late, they don't keep charging you, right? And so people, it's like an understanding type of borrower, but they don't lend to everybody. But they've got certain niches of products. But it was a big innovation, and it continues to be a very successful company. We're leaders in capital markets and investment banking. Today, we're the #1 issuer of bonds and commercial papers on the stock market, not stock market, in the capital markets. This year alone, we've issued about 3 trillion naira of bonds and commercial paper for different corporates in Nigeria. For us, that I see as a sustaining innovation. There were other ways people used to get financing before. We've created better ways of doing it through the capital markets, and that has helped those companies just to fund themselves more efficiently, because today it's more expensive to borrow from a bank than it is to borrow from the capital markets, right? As FCMB as a bank, we're a leader in consumer and SME financing that is done digitally. And we serve about 15 million customers, probably lend to about 2 or 3 million at any point in time. Our portfolio of digital lending in the consumer and SME space is about 500-600 billion naira. So it's by far the biggest, in the ecosystem. And what that's done is that it's actually helped create a lot of people that didn't have access to credit before, through one of FCMB's portfolio companies, can get access to credit. And it's only going to grow because we have a vision in certain of our companies to help plug the massive credit gap in Nigeria, and credit that people can repay, not credit that will have 80-90% default rate. Because we operate, our whole philosophy is we must keep those that struggle to repay to less than 10% of all the loans that we give. And even of that 10%, maybe 40 to 50% of them will still repay with some help, and so on. So part of the vision that we have as a business is to say, the credit gap in Nigeria, everybody needs some form of credit, because there'll be certain assets you need to buy in business or life or whatever, that frankly, your daily salary will not be able to do, or if you're a business, your revenue will not be able to do. So there's a massive credit gap. So our entire sort of mission in certain parts of our group is, if that gap is 5 trillion naira, for argument's sake, that the country needs, right? What portion of that 5 trillion are we confident that if we gave, 90% of it will come back? And then you find ways to find that and do that. And using innovation, technology, AI, we're continuing to expand that. So consumer and SME lending for us is a big part of our strategy. Asset management is also an area where we've done some innovation. We created Nigeria's first private credit fund. This is getting a bit technical now, but private credit is where instead of borrowing from a bank, you're borrowing from a fund that is funded by the pension industry, right? Normally funds, they invest in public markets, bonds, equities, but it's possible for a fund to say, I will invest in private loans. Like if John Vent needs a loan and they don't want to go to a bank because interest rate is too high, they don't want to go to capital markets because it takes too long. We have a private credit fund that is cheaper than banks, that is funded by the pension industry that they can borrow from. And we're the first to do that in Nigeria. In the US, the private credit market is a $2 trillion market, right? A lot of people are borrowing from there as opposed to banks. We've recently launched a fintech brand called Rover in FCMB Group. Rover basically is going to be in most African countries in the next 5 years. If you know Revolut, it's doing something similar, but we haven't switched on many of the capabilities. It's basically going to allow you to send, spend, save, and receive money in multiple currencies on one platform, right? Today it's available GBP, USD, and Naira. We haven't switched on the FX part that you can switch money from country to country, but we switch on that in December, just in time for Dirty December, because a lot of diasporans are coming. And then by next year, you'll be able to take money out from Naira to GBP and USD in a very frictionless way. But there are many fintechs that offer that already today. But the problem is many of them die within 3-4 years because they run out of funding, because FX is not that profitable because the margins are very tight. So you have to also offer other services and products around it. So with Rover, we also offer banking. So we offer, current accounts, fixed deposits, and so on and so forth. And any of you can feel free just to look for the Rover app, download it, test it out. If you want to open a GBP or USD account, you can do so. But the FX functions will be turned on in December. Similarly, the technology we've used to build Rover, and the other thing about Rover is that it will be available in many African countries in the next 3, 4, 5 years, because we realize that the African youth and the African SMEs, they need to do business globally. They need to spend and receive money globally. It's not just in their own country. And how do you do it with a trusted platform that is owned by a bank? And that's really what we're doing with Rover. Similarly, we've built technology that we're now rolling out across our group. So when I talked about building, the technology we used to build Rover is now being used by many other parts of the group to run their operations. Other thing I'll talk about, agriculture. FCMB is the biggest agricultural lender in Nigeria. We've innovated ways to lend safely to agriculture. Before we were lending to agriculture, maybe it was like 1-2% of most banks, loan books. It's about 10% of our loan book. We lend to smallholder farmers, and it's having a big impact in communities. And the last thing I want to talk about is what we're doing with AI and generative AI. So today we have 2 chatbots, one for Credit Direct called Clara, one for FCMB called Timmy. Both of them, they handle customer, inquiries and so on. 70% of our customer inquiries on the app, on web, and soon by WhatsApp happen through our chatbots. It's reducing our cost of supporting customers. We're now dispersing loans using AI when people apply, right? And that's part of what has driven our loan disbursements up to about 10,000 loans a day in Credit Direct. So these are just examples of the innovations that we continue to do in FCMB. Some of them are financial, some of them are technological, right? But having that mentality of always building has been key to support that. Now, what I want to also then end with is, before I bring it home, still on the FCMB examples, is say, okay, is this just invention or is it innovation? Definitely for us, it's been innovation. If you look at our share price in the last 3 years, it's risen by an average of 42% a year, from about 3.85 naira to 11 naira, although it's come down to about 10 naira right now, right? And that's really because of the earnings growth we've been seeing, where we've grown from about 36 billion naira profit to about 185 billion naira profit by the end of this year. Now, why is that important? We're not the most profitable bank in the country, for sure, right? But a lot of the value we're creating is coming from innovation. And when you look at some of the things that we've done, we were the first bank in Nigeria to win a global award for investment banking, something called Euro Money Awards. That was back in early 2000s. We've pushed just this year alone about $3 trillion of capital from the pension industry to entrepreneurs and businesses in Nigeria. We've raised for ourselves in 2024 about 140 billion, of which about 92% came from people applying from their phones to buy our shares. This year, we're raising about 160 billion. The offer is just closing in next week. And it would mean that since we listed on the exchange, we've been able to raise over $800 million from the Nigerian Stock Exchange, mostly from Nigerian investors. And that in today's money is about 1 trillion naira. We're the largest non-bank lender with about 30% market share in non-bank lending. We have 15 million customers today. We've built our own apps with our own onboarding journey. Today, if you want to open an FCMB account, on the FCMB app, if you open on OPay, it's 14 steps. If you open on FCMB, it's 8 steps. So it's actually faster to open on the FCMB app than it is on OPay. And that's because of building, no other reason, right? We have about 700,000 SMEs that we've been able to lend to in the last few years, and we get a lot of funding, and this is collaboration. A lot of local DFIs like Bank of Industry, Development Bank of Nigeria, and so on and so forth. They give us money because they know we're innovating the lending and we're trying to close the credit gap for SMEs, right? And same with foreign development finance institutions. And then on agriculture, we've moved from about 159 billion naira of loans to the agricultural sector to about 264 billion naira this year, right? And that is helping food security, helping to bring down inflation. So for us, the innovation we're doing is not about just doing cool stuff. It's not about even making profit, right? The innovation for us is actually at the core of our purpose. And our purpose as a group is to foster inclusive and sustainable growth in the communities we serve. And that is the stated purpose of FCMB Group. So what the leaders of FCMB do is we make very clear our vision and our purpose, why we exist. We then create an environment where people build, where they collaborate, and we give them the freedom to experiment and innovate. And through that, we have been able to achieve what we think will be an institution that will outlive the current management leadership. And I think will be here for more than the next 100 years. That I'm very sure of with what we're doing. And I hope that many of you, as you think about leadership and innovation, realize that those two ingredients are the only things that will stop you, or the lack of them are the only things that will stop you from creating very, very successful businesses. So I hope that's been helpful, and I hope you've learned a lot, or something at least. And I just want to finalize and say, what does this mean to all of you? Number one, innovation is driven by vision. So whether it's in your personal lives or in your professional lives, you've got to think about that vision that will spur your innovation. Number two, it requires building, taking risk, and making calculated bets. Number three, it will thrive in an ecosystem where there's capabilities, but then also partnerships. So innovation will never be a solo effort. Number four, innovation will be sustained by realizing value and then transferring skills. You don't want to build pyramids or cathedrals. And number five, as a leader, and this is where leadership comes in, you have the responsibility to foster and sustain innovation. So that's it. I hope you've enjoyed it, and it's been my pleasure speaking to this one. Yeah. I hope that wasn't much more than an hour. Slightly more.
Thank you very much, sir. You can. Please, can we put our hands together again? Wow. So at some point during the session, I was just trying to maintain my steeze and composure because I actually felt like shouting, like, yes! Because there were so many light bulb moments for me. I would like to get light bulb moments from those of us in the room as well as those of us online. We have, according to an analytics, over 500 people have joined this session online. Please, can we celebrate the online audience once again? Thank you very much for joining. In fact, I think we should do something. Why not create a buzz around this? If you have your mobile phone, please pick your mobile phones and let's all go on X, formerly known as Twitter, and just write one striking thing that you learned here today. And let's use the hashtag Miva Masterclass with Ladi Balogun. Can we do that? Okay, let's take a moment to do that, everybody. We can do that in 5 minutes or less. I think we can do that in 2. Just quick note there, something that stood out for you from this session. And while you're doing that, I'd like to share a few things that stood out for me. First is that, while I was introducing him, I talked about how he transformed a small merchant bank into a bank that is over $3 billion in assets right now. And when he came upstage, the very first thing he made note to say was the fact that he is standing on the shoulder of giants. Like, some people have gone ahead of me and they've set the pace for me to follow. And I think that's quite remarkable, recognizing the fact that you did not just come as a Superman. Some people have helped you to achieve all that you are doing right now. And I think that also even speaks to the core of what we're talking about today, building and building. Some people built and empowered you so that you can build as well. And I think another thing that I found remarkable about the session is now I have 2 books at least on my to-read list. What are the 2 books? Anybody can remember?
I'm saying this unapologetically because I'm in the field. So they're in for the profit and not necessarily for the value they create for people. You hear people, they raised this funding, that funding, but the motive behind those funding are not really to solve problems, but just to make profit. So now, in the space where, fintechs like MoneyPoint, OPay, they take over the market, are they really a threat to FCMB or other banks, or are they just, businesses? Thank you so much.
Okay, I'm noting your questions down. Let's take three at a go, and then I'll answer all three. So number two, who's
Thank you very much, Mr. Ladi. My name is Oluwatoyin, and currently I drive business development at one of the fintechs you
which
spoke
one?
about, VPay. So,
Okay.
yes, I
Okay.
got into the market 3 months ago, and I see you talk about building capacity to actually build, and you made a comment around how that a lot of them don't have the capacity to actually thrive, especially in terms of funding and growth. So now, as someone in that space, an entrepreneur, now I've never had to found something before, but as an entrepreneur in that space, trying to build and also trying to see with the visionary how to scale this. What is your take on building to build? I'm talking about where you spoke to building the capacity to build. So how do we build the capacity to actually build the solutions? Thank you very much.
Okay, so the question is, how do you build the capacity to build? Okay. Okay, one more.
Right. Thank you very much, sir, for the privilege.
Call me Laddie. You don't have to call me sir.
Sir.
Call me Laddie. Don't call me sir.
Okay. That will be quite difficult. So thank you for the privilege.
Laddie.
Okay, thank you for the privilege, Ladi.
Good. Better.
All right, my question, I'm very much fascinated by the idea of innovation and how you make it like you have a concrete framework. That if you cultivate the mindset of building and you're able to build a culture of building, you always be innovative. We all know that innovative can be very messy sometimes and is not always successful. So how is your communication to your team like in terms of, okay, we encourage innovation, we encourage experimentation, but this is the direction. Do you set like a direction or you leave the team, please, we encourage innovation, do whatever that is fitting for you, or is there like a bandwidth of communication within that group to make sure, okay, there's a particular direction? And how do you make sure your innovation is not being reactive? That makes you are looking at the environment of what people are doing, or you bring it in. Your team is able to bring in something from within. Thank you.
Okay. Okay. We'll pause there. Your question was the most complicated, so that's the one I may not score A. But let's see how we go. So I'll go in reverse order. So in terms of communication to the team, the part that I actually found quite tricky is how do you make sure the innovation is not reactive? And I probably have to reflect on that a bit. But very simply, on the first part of your question, you absolutely have to create the boundaries. You have to set the direction, right? Because a business exists, for a business to have a culture, a good culture, the vision must be clear, the purpose must be clear, right? And if those two, and the mission, and each of those things are different things. The vision is where you want to be sometime in the future, right? And there should be a clear state. FCMB Group has a vision, which is to be a global financial service group of African origin, renowned for epic leadership in our chosen markets. Now, epic leadership actually means something very specific for us. It's our values: excellence, purpose, innovation, customer focus. On those four things, we want to lead in our chosen markets, right? It's very clear, and we measure those things, right? So your innovations must be in line with that vision, one. Two, we have a purpose, which is to foster inclusive and sustainable growth in the communities we serve. What is a purpose? You must be doing good, right? Why do you exist? God has not blessed us with the skills, the opportunities, and the things that we have for reasons other than to make this world better. It's the only reason. So we've got to figure out why, right? So you've got to innovate. Once you guys understand your purpose, what good you're trying to do, you've got to innovate and you've got to get your troops to always remember that's why they're here. And then the final thing is the mission. It's how are we going to do that? What is the mission today? Why are we getting out of bed today to do this thing? Everybody in the company should understand that. You get those three things right, you begin to create a winning culture. And innovation should be in line with that. Now, the second part of your question is reactive. How do you make sure it's not always reactive? It's not one I'm going to give you an answer. So you know how sometimes in an exam question, if you show you're working, but you don't give the answer, at least they'll still give you C, not F. So I'll show you my working, but I don't have the answer. There are some companies that they've decided we will just imitate. A very good example is in the past, Samsung did not try to be the innovator, right? They will be fast followers. China's many things in China, they just innovate. I mean, they just react and replicate. DeepSeek, if you know AI, basically, learned from, reacted off OpenAI, right? So reacting may not necessarily be a bad strategy. But the one thing I'd say is make sure you react fast. Don't spend 5 years reacting. And sometimes when you react, it's a form of collaboration, learning from others. How, if you want to be a true pioneer, that you're doing things that haven't done before, the only thing I would say is be very customer-centric. Understand the problems of your customer. And that way, you will be reacting to the customer and not the competition. So that's probably how I'd say be very customer-centric. And you'll be shocked how many big companies are not customer-centric. They chase products, they chase opportunities. So let me stop there because I could go on forever with what you've talked about. But I was good. You asked me, how do you build the capacity to build? I think one of the first things is you need engineers in the business, right? Two, once you have engineers, you also need product managers in the business. And you need good ones. And you need three kinds of skills in the product organization. You need what I call product design, where you even just design a product that solves a problem in an elegant way. You need product delivery, those that can manage the engineers to make sure you deliver on time and at the right quality. And then you need product growth, right? There's a product discovery which can sit in design as well. But those for me are the three sort of buckets that I'd put product under. And they must work very closely with your engineering organization. And you should choose the easier things to build first. Because if you build things in small bite sizes, they may not be great. Look, I'm ashamed of something. Rover took us 5 years. Most fintechs launched their thing in 6 months, right? But I know that because we had never built things before, we built it one time, didn't work. We started again, did this. We kept on learning how to build. We made mistakes, right? Certain things we said, instead of shipping an MVP in 3 months, we thought, let's ship everything with all. In fact, we had to strip out 60% of the products that we had. Their products, we launched offshore debit cards. We did this. In the end, we just had to strip them because nothing was working. We built like, trying to think, almost like a cathedral, a monument. You know what I mean? Instead, we should have been building something with paper and wood that we can break down and start again. So again, the lessons from that Japanese thing that I gave you is that build things that you can tear down and build again, because that's also how you learn, right? They say fail fast, fail cheap. Have you ever heard of that phrase, right? So if you're going to build an engineering, whatever you call it, or a capacity to build, be accustomed to failure. Know that it's not going to work, and then you improve. So that's what I'd say there. Are fintechs just in it for the profit, or are they disrupting? I think the ones that are just in it for the profit are not going to survive or be sustainable. But I also think that if you're not profitable, you're not going to be sustainable. So profit is essential. Right? So if I look at FCMB, we have a purpose, and we're a purpose-driven organization. But we actually say profit before purpose. Why? Because sometimes you will just get involved. I want to do good, save the world, do whatever, and you are losing money, and then you run out of money. And then you can't pay your staff, you can't do all this. So you've got to know how you're going to create value and monetize the value, right? So that's key. Some of the fintechs are disrupting. However, what I find is most of their disruption is also proving to be replicable by the incumbents, the traditional banks. And I'll give you an example. I won't mention names, but there is a company that has taken massive market share from banks with POSs. The way they did that was they ensured that the POSs were transactions never failed. They ensured that you would get instant notification as a merchant or an attendant with a POS for a transaction that came through. And they made sure the speed of the transactions were very fast. And then at the back end, they made sure the merchant was settled instantly. Whereas before, you may get an alert that somebody has paid, but the bank at the back end wouldn't settle you until T+2 or T+1. So those features just meant the minute they told the merchant that I can do this for you and it worked, they just dumped the bank's POS, put this company's POS, and they took massive market share. Today, because of that, I think they're now valued at over $1 billion, if I'm not mistaken. But the problem for them is people understand how they did it. So everyone is now moving to that, and that's becoming standard. So even we now, our new generation of POSs, because we've engineered it, we can now do it. It offers the same thing. But you're playing catch up now because they've captured the market. So they had first mover advantage by being disruptive, which is why sometimes disruption is not enough, right? And you need to have something they call a strategic moat. What is a strategic moat? A moat is like a barrier that others can't just cross and do what you're doing, right? So the problem is a lot of the fintechs, they don't have strategic moats. That's their biggest weakness. Which is why many of them, wow, wonderful, they're doing this wonderful stuff, but 3, 4, 5 years from now, I'm sorry to say, wonderful company, but Paystack is no longer the darling that it was. Flutterwave, no longer the darling. They're good companies, don't get me wrong, but they're not, they're not the way, let's say, a Meta, a Google, they've stayed ahead, right? That takes something much, much, much more challenging. What that takes is building an organization where there's constant innovation and leading with innovation. I promise not to mention names, so please edit that part of whatever I said. But I think that a lot of the fintechs have done very well in disrupting, but to sustain that disruption takes a very intentional, whatever you want to call it, decision that we're going to continue to innovate as a business, right? Which is not an easy thing to do. We've tried, it's one of the reasons why we've survived. We're not the biggest, but we continue to evolve and innovate. And that's an intentional thing we say we're always going to do. It requires scale because innovation is expensive. You'll make a lot of mistakes. So some of you know Meta is paying, was it $100 million salary or something like that for AI engineers? Who here knew that they're paying that much? You better go and learn AI quickly and send your CV to Meta. But it's expensive. Okay, let's move to the next three. Yes. Okay. Okay. In the context of financial products, who's an engineer? Okay, let me just hold on.
That's the privilege you get for being in the room.
Yes. Okay, two more questions.
Okay, so I would like to put a pause on the questions from the room. Please hold on. We have a flurry of questions online as well. Just a moment. So I'll take this one. How do you balance being an empathetic leader with firmness, making sure that your empathy is not at the cost of work, delivery, or team cohesion? Then another question, I'm wondering how FCMB is able to handle defaulters when it comes to loans. How do innovators continue to get issues around taxation within their control using your bank?
Sorry, can you repeat that last one? How do
Innovators continue to get issues around taxation within their control using your bank?
Oh, okay. I think I understand. Okay, how do
Okay.
innovators just repeat it for me one more time?
How do innovators continue to get issues around taxation within their control using your bank? I think that it gets
Yeah,
about
yeah, yeah.
issues.
Around taxation under control using your bank. Okay, I think that's three questions, right?
Yes.
One in the room. Okay. In the context of financial products, who's an engineer? Very good question. I call them the structurers. So let me give you an example. March this year, we were approached by a structurer in an international bank. And they said, we will lend you dollars at 7% or 8%. You will give us those dollars at 7%. I even say 8%. Well, let's say 10%, right? I can't remember the rate they said. You'll give us those dollars at 10%. So you'll give us those dollars that we've lent you at 10%. We will use those dollars to convert into Naira and buy Nigerian treasury bills, right? But we'll buy the Nigerian treasury bills from a special window called OMO, Open Market Operations. It's only available to international investors, and it's at a higher rate. And the government uses that to attract money into the country to provide supply of foreign exchange. And on those OMO bonds, you'll get 25% Naira. But if the Naira should depreciate, when we return your money, we'll return the dollar equivalent of what the Naira that we're sending back is. Do you get what I'm saying? So you're taking the risk. It's costing you 10%. You're getting 25% from OMO bonds. That's a 15% margin. Very healthy, correct? But at the end of this transaction, when we're sending the money back to you, if the Naira is now 2,000 to 1, guess what? You'd have made losses. But at least we will make sure that you will get the dollars back so you can pay us. So there's a term they call that. Anyway, I don't want to get into the technicalities. The structurer in that international bank structured that product to make sure that all those things would happen. Many people in Nigeria saw the Naira is going to be stable. And so many people bought that product and they made a ton of money. That is structuring. That may be structuring for a one-off opportunistic thing, which frankly, a year from now may not be there. So that is financial engineering. And there are many examples. I could give you many examples. The people that created our private credit fund were engineers, the thing that I talked about. And, I'm being very careful not to take too long on these things, but they created a product where SMEs could borrow at 25% instead of maybe the 30% that they would borrow from banks, right? But it would still be very profitable for the pension funds that gave them the money to lend to the SMEs, because pension funds typically, when they invest, they're only getting 16%. So somebody structured a product that made pension funds more money, but still allowed SMEs to borrow at lower rates. So that is engineering. Somebody created that. So in finance, there are many examples, but those are examples of areas in where you'll find the engineers in finance could be, first of all, in your CFO office, sometimes you engineer your balance sheet, you engineer your funding, you engineer things just to make your business more efficient or more profitable without necessarily selling more. That is engineering, right? And you would understand financial engineering in that sense. Sometimes your engineers will come from, in banking, your treasury department. They have excess liquidity, they want to invest, they may engineer. Sometimes it will come from your asset management area, where they're helping clients invest and get better returns by engineering solutions for them. Sometimes it comes from your corporate finance department, where they're helping people get financing at better rates. Those are the areas we've seen a lot of our financial engineering. So I hope that answers that question. The second one, how do you become an empathetic leader and still be firm? That's a tough one. So I think the first thing is you have to be very prayerful, right? And I mean that. And you have to actually find a way to meditate. And what do I mean by that meditation? And meditation could be by prayer. It could be, if you're agnostic, it could be by meditating, a few times in a day. It sounds stupid, but I'll tell you why it's actually very important. Because as a leader, you have to cultivate something called emotional intelligence. And if you look up emotional intelligence, there are many different aspects of it. One important aspect of emotional intelligence is separating emotion from your behavior. Just because I like you doesn't mean I won't fire you if you're not performing. If I'm emotional, I will not be able to fire you. So you have to cultivate that emotional intelligence to separate your emotion from what is the right decision for the company. That's the first thing, right? And it takes time. The best leaders have exceptional emotional intelligence. You'll never hear them shout, right? You'll never see them lose their temper. So if you're losing your temper as a leader, you may still be very successful, but you may not be as good a leader as the guy that has, or girl that has, the same skills you have, but never loses his or her temper. So you have to cultivate, and it's very possible to cultivate emotion. I'll give you another book to read about cultivating emotional intelligence. It's called The Subtle Art of Not Giving a F.K. Right? Sorry? I don't know who wrote it, but I read the book some years ago, and it actually talks about emotional intelligence. Another very good about emotional intelligence is written by a Buddhist monk. It's called Fear, something like Fear, the something essential wisdom for surviving the storm, or something like that. There's a famous Buddhist monk, Thich Nhat Hanh, or something, I don't know. Anyway, it would be difficult to find, but it's something like Fear, something surviving the storm, right? But it's how do you control your fear? Because sometimes the question was, sometimes you're not firm because you're afraid. You're afraid that it's going to hurt the feelings of this person. So you have to master your emotional intelligence. I think that, for me, and it's not easy, it's an art form. The other thing that you will do whilst you are trying to master your emotional intelligence is that set up committees to take people decisions, because you'll be weak, right? And take people decisions based on data. And so whenever you're like, oh, okay, let's keep this person, or let's promote this person, because I like him, work closely with him. If you have a process that is data-driven, and that process is kept honest by having, sorry, I have a 1 o'clock. I just have to tell them that I'll be late. I will not participate. So give me a minute. Yeah, so if you have a process and a committee, you'll be fine, because that committee will make sure you stay true to it. So that's how I would deal with it. Can we just pause a minute and I'll just send a message for this 1 o'clock? I didn't realize we'll go on this late. 1 second. Okay, so the last question from that batch was, how do we handle defaulters when it comes to loans, and how do innovators continue to get around the issue of taxation under control, right, using a bank like FCMB or any other one? Defaulters when it comes to loans, I think the first thing is you've got to pick your borrowers carefully. Those that have a high willingness to pay, even if capacity to repay is not there. And there are many ways you can establish a willingness to pay. You won't get it right all the time, but oftentimes you will. And part of it is past track record. What habits have they shown? If somebody is a borrower for the first time or is having a credit relationship for the first time, they probably, and there's evidence of, what do you call it? Whether people meet their obligations, whether they take them seriously. And it's often a behavioral trait. It's like, if I promise you I'll turn up for something, I turn up. If I say I'm meant to be at a meeting at 1 o'clock or a session at 1 o'clock, if I'm not going to be there, I let you know, please, I'm not going to be there, I'm going to be late. Some people won't even send a message. They'll just turn up an hour late. Those are behavioral traits that actually impact a willingness or ability to repay, a willingness to repay. I think where somebody is borrowing for the first time, you don't make it their choice about repayment or not. You either deduct at source or you have collateral. Those are the only two things you do, right? Unless what you want to do is you lend very small amounts where if you lose it, you don't mind, but you use that to establish a trend or a pattern or a behavior. But most of the digital lenders that have tried it that way have ended up not being successful, and most of them have never recovered from that. The issue of tax, I'm not sure I understood the question, but I would say is that tax is becoming very critical in Nigeria now with the new tax law that's coming next year, or that goes live next year. So SMEs are going to need help to make sure that they're on top of their taxes. So a bank, and we're now thinking about how we build that, and we're not going to be building and ready by the time by the beginning of 2026, because we only, in fact, just this week, started to identify that we need to have a solution to help SMEs do this. So you need to support them with accounting packages that allows them to be able to estimate what their tax payable will be, and to be able to assess, not even estimate, assess what their taxes are. Because a lot of companies, SMEs, financial records, they will not be able to do it. Imagine if every payment you do, you have to charge VAT, everything, there are just so many things that companies have to think about, right? So you want to be able to do it real time. So you'll find a few banks and fintechs are going to start building products, payment products, that also give them access to basic accounting packages that will estimate what is the tax expense on this transaction. We have started ideating on it, but we don't yet have a solution. But I expect by middle to late next year, we will. So maybe we'll take how many more? Is it more than 3 more?
Because of our time?
Yeah. So I'm going to have to wrap up. So maybe I'll take 3 more.
Okay,
and then,
that's fine.
yeah.
Okay, so we'll take 1 from the audience here and 2 from the online audience because we have more people there. Okay, please go ahead.
Okay, thank you for the briefing, sir. My name is Bengal. A Miva student, Mass Communication and Media Studies, sir. Actually, you've partially answered my question, sir. But nevertheless,
For me, Ladi, not
if
LB, if you can't say Ladi,
I won't do that, sir. Sir, okay.
Very
I'm
stubborn,
more
young
of a
man. You are
literature
even late.
person, sir. Permit me to quote you, sir. Innovation is
No,
by
I won't answer the
building.
question if you keep calling me sir. I'm very serious. It's important for you, and I'll tell you why. You're not going to foster innovation in an environment that's very hierarchical.
Innovation, okay, sir.
Somebody must have bullied this guy.
Innovation is by building, not buying. How do I know I'm building? I'm not buying, sir.
Okay, all right. Anyway, I'll forgive you for calling me sir so many times. But, okay, that's 1.
Okay.
2 more.
All right. For the online audience, somebody Evan says, please, I would like to learn more about the shares of your bank. I bought some over a year ago. I actually don't know my way around it and would like to buy more on this year's offer. Another question from Aziz. My question is, how do you strike a balance between driving innovation and addressing the threats imposed by new entrants, posed rather by new entrants such as fintechs?
So the last one is, sorry, what about the threats of new entrants? What was it?
Yes, driving innovation and addressing the threats that they pose. So how do you balance innovation and also addressing
Threats
the
of new
threats?
entrants.
Yes,
Okay.
of new entrants.
All right. Okay. So first one, sir, is how do I know, sir, that I'm building and not buying, sir? Okay. Building and not buying. How do you know that you're building and not buying? So I think if you are buying, so there's actually 3 ways in which you acquire technology. You build, you assemble, and you buy. So let's use an example outside of banking to see if I give you an analogy that will help you understand it. Nigeria says we want cars or something, we want to have an auto industry. The buy in the auto industry, when you just, Toyota Nigeria Limited ships cars to Nigeria, complete, and then, they sell it. So that is a buy strategy for the auto industry in Nigeria. Buy strategy is not entirely useless because it will still create some value. People get to drive around. But the margin is very low, right? And the skills in country is 0, other than maybe maintenance and mechanics, right? The equivalent in a banking industry is, let me think of something we built. I want to upgrade my app. I will know that I'm buying when, let's say, I just put out an RFP, request for proposal, to different vendors, and they say, I will charge you this much, and then you pay, they deliver. You don't require any engineering skills at all. You just collect. I mean, they deliver and then you start using it once they've finished. It may or may not work. You may have people to maintain the app, right? But that is an example of buying. Assemble in the auto version is where they ship CKD to you, right? And then you just put it together. Assemble in the banking example is maybe, again, you use the app analogy. You may say that, okay, I will build the front end, the user interface, and that's a partial build actually. For everything else, I will buy and just plug in. So I'll plug in the core banking, I'll plug in the payments, so I'm not really building much. So if payments fails, I can't fix it myself. I have to get the vendor to help me fix it. But if, let's say, the front end of the app, let's say the app, I want to launch the app or open the app and it's not opening, I may have the capabilities to fix it. But many things that go wrong, I can't fix myself. So that's where you know you've assembled, right? That you can fix a few things, but not many things. The build is where everything, you've actually got engineers to design it. One way you know whether you're building is for everything you build, there's a design process. It's like buying a house. You don't design a house you buy, right? So it has to have been designed. And then you move from design to the build. And typically somebody will build either in-house or you'll contract people to build based on what you've designed. So if you ask me how you know, it's often that was there a design element or process in that exercise or not? So second question about buying our shares. Thank you very much for asking. You can just go onto the FCMB app. If you're not an existing user on the app, you can actually onboard on the app, 8 steps, and you'll be able to buy through the app. And that's the easiest way. And even if you're on the app, if there's any questions you have about the shares you've already bought, by the way, you received a dividend, should have received a dividend. If for any reason you haven't, from the one you bought last year, I think it went up about 40% so far, and then there was a dividend of about 8% of the share price. So if for any reason you haven't received any of those, just contact us through even Instagram or something like that. Look for the FCMB page and just contact, and somebody will get in touch with you and make sure that the account for receiving the dividend is in place. But if you want to, you can also reach our broker, CSL Stockbrokers, and you can reach our the broker CSL, either through Instagram or through their website, and send them a message and they'll get in touch with you. But the easiest way is through the app. Just download the app and you can buy, the shares. That's the easiest way, I would say. Driving innovation and addressing the threat of new entrants. So the first thing I say, if you want to avoid the threat, or if you want to manage the threat you can't avoid threats, but how do you address them, is you have to be able to build. Organizations have to be able to build. That's one thing that's extremely important. And I think building and innovation are very closely tied. The other thing is that to manage the threat or address the threat, you've got to have what I called, you heard me refer to something as strategic moat. What is FCMB's strategic moat against fintechs? I'll tell you that we have 3. The first is trust. We've been around for 47 years. So a lot of people, if we offer a service, there's many segments of the economy will say, okay, if it's provided by FCMB, I know they'll still be around. If I leave my money in that, whether it's Rover, whether it's FCMB app, whether it's this, it's not going to go. We've all heard about fintechs going bust and people losing their money. Happens all the time. So that trust with FCMB, they've been around for 47 years. They have plans to be around for another 100 years. You know what? you're probably better off if you're doing a transaction where you're going to leave money anywhere. Make sure you're doing it with somebody that has financial strength. And I've told you, we've raised over $800 million in the markets. We make over, 180 billion naira a year of profit, and all that profit goes back into the business. We pay a little bit as dividend. So they have the financial capacity, and that trust is very important. Closely related to that trust, which is very important, is people know the character of our leaders. And it's one of the reasons why I take time to come to events like this, because it helps build trust with the brand, right? So you're like, okay, I've met this person, I know them, so I know that if FCMB doesn't pay my dividend, I know where to find Ladi Balogun, so I'll chase him up and get my thing. But trust matters, right? And so that for us is very important. And we pay a lot of attention to our leaders. I'll tell you something that happened some years ago with FCMB that for us was, very interesting. And sorry, I'm also our chief marketing officer, but it's a very true story. Do you remember when they had this cash issue in Nigeria where they were changing the domination of Naira, right? There was a lot of cash shortage, right? You remember? And people got very upset because they couldn't get hold of cash. And in several parts of the country, and the video I saw was in Shagamu, they started burning down bank branches because they were blaming the banks. But there were videos that were being sent to me of people in the towns protecting the FCMB branches and saying, don't burn down this bank's branch. They're one of us, right? Now, you may argue, okay, yeah, Shagamu is Ogun State, Ladi's from Ijebu, so is Ogun State, so that's why. But this also happened in Edo. Right now, we're very intentional about being very community focused. So there are many things we had done in those communities that meant that they trusted us, right? That we were really on their side. So trust is not just about you've been around for a long time. It's also about showing that you are with the community, right? So it's, again, if any of you follow American politics, it's like Mamdani in New York and, Cuomo and all this sort of stuff. The people feel that, even though he's a Muslim and he's a socialist and they're not socialists, and they may be Jewish and, he's a Muslim and, why would you? Half the Jews are supporting Mamdani because why? They trust it. Right? So building a brand that is trusted is very key. So that's one of the ways we compete, building that trust. A second way that we compete is what we call our ecosystem strategy. And let me tell you about the ecosystem strategy. A very good example of ecosystem strategy, and many companies are deploying it now, is Microsoft. One of the reasons Microsoft is a very big provider of cloud, I think they're number 2 in the market after Amazon, is because if I'm already using Microsoft for email, I'm already using Microsoft for Teams and meetings, I may as well just get my cloud from there because it integrates more easily with my systems, so on and so forth. And it's a similar thing with FCMB. There may be other people that can give you loans, but if my salary already comes to you, if I'm already doing investments with you, if my pensions is with you, it's just more convenient. And hey, guess what? I now have more data on you. And so because of all the interactions I have with you, I can probably give you better terms or better credit or better whatever. Whereas if I deal with a fintech that is only providing one service, they will go to them for just that one service. And sometimes that service may not even be priced competitively because they're only making money from you on one thing. With FCMB, there's an ecosystem. So it means that there's a convenience and sometimes a cost advantage for dealing with us versus a fintech. So that's the second thing. The third thing is that we have financial capacity. So we're patient and we're there, we're dogged. And when you have the resources, fintechs are fast. But the thing is, they can be like a shooting star. They'll rise very fast and crash very fast. But we will be persistent. And that financial capacity is important because it means that you will get the product right. You will keep at it. And at the end, typically the customer experience, in most instances, not all, will eventually be better. Not in the early stages, but we have the capacity to make it better. There'll be a few fintechs that definitely, you will not beat. And they typically are the ones that end up having the financial capacity as well. But most don't. So I think those are the three questions, right? Yeah. Okay, good. Thank you. So I had a 1 o'clock with my mother, so you guys will have to explain to her that why I was not able to join at 1. Okay, good. Thank you.
Thank you very much.
Thanks.
All right. Thank you very much, everybody, once again for joining in. Thank you very much for your time here today. Wishing you all the very best. See you at the next Miva Masterclass. Bye-bye.